Huh?
You never know.
Thank you so much for tuning into Journey with Christian D. Evans podcast. I'm your host, as always, Christian D. Evans. We have a very special guest on today. He's the senior managing partner at PKF O'Connor Davies, which focus on CFO for 450 million private equity investors and $180 million hedge fund. Transaction advisory, including M&A to private equity, privately owned businesses and transactions, quality of earnings, due diligence. They also focus on a coordinated service delivery for accounting, back office, outsourced tax and fund and administration, and your CFO. Now, he is what you call, I would suggest, a connector, a world super connector, where he's able to bring the right people by leveraging his extensive network of contacts and bringing his exceptional ability to connect the dots, create valuable solutions and profitable solutions as well. Please welcome Eric Gelb, the Senior Managing Director at PKF O'Connor Davies. How are you doing today, Eric?
Great. Good to see you, and thank you so much for connecting. Just to clarify, I'm a Senior Managing Director at PKF O'Connor Davies. We're the 25th largest CPA firm in the country. We're very proud of that, with a legacy of over 130 years, since 1891. So let's get to it. What do you want to chat about today?
Yeah, Eric. Well, one of the things is and I appreciate that correction, but one of the things I want to talk a little bit about is we were talking about offline previously, kind of the CFO world, right, and the services and accounting. And what is interesting, you've worked with a lot of companies from all different arenas, right, whether they're, high 8-figure, mid 8-figure, running on 9-figure, and they're looking for that next level of, really that CFO service, right? That concept of, hey, you know what, let's go ahead and streamline this whole process. Do you find, I'm curious, Eric, working with so many businesses, do you find that that is a weak spot of a lot of entrepreneurs and a lot of founders in regards to, really knowing what their financials look like and their KPIs?
Yeah, I think a lot of, especially the smaller companies that have grown, right, absent an acquisition, most companies start with the germ of an idea, which is the beauty of it and the adventure, as well as the excitement about, I know you have an international audience, but certainly America, right? And the land of opportunity. So I think that people have all sorts of accounting systems. Some are on paper. I don't know how many people still use that green 8-column paper. I have a few sheets maybe somewhere in the basement, I don't know, with dusty and whatnot, damp. QuickBooks or whatnot, and QuickBooks is an excellent program. The question is, how do you make, as you said, KPIs and key performance indicators? So we see sometimes that companies outgrow their accounting systems and they need more sophisticated systems as well as tools to manage their business. It's very timely that we're having this chat now, given all the turmoil in the banking market, right? And I think, including myself to some extent, frankly, having worked at Citibank and JP Morgan in transactions and corporate finance, I think people just assume that things are okay. I always sort of default to the old sort of joke, say, would you lend or would I lend money to my brother-in-law? And I don't know, right? So it's really important to think of who you're doing business with. Consider what kinds of really the components that drive your business. What are the internal and external factors that could be opportunities or risks? So I think having KPIs and the right data and then knowing what to do with them is really important.
So let me ask you this, because, when I scaled my business, I knew that there was always like graduation levels, right? Just like in school and college and everything like that. And it's the same thing with business. Like you get into certain hurdles and then you start realizing, okay, you need to level up with, your sophistication, maybe with your employees, maybe with your systems, maybe with the operations, maybe, and this is a really good example with the CFO side of things, right? The financials. And I'm curious, Eric, when you work with so many companies, because there's a lot of our listeners that are at that stage where they're just pushing over 8 figures, or they're running to mid 8 figures, and they're looking to scale to 9 figures, and there's a lot that goes on during that time frame. And I'm curious, do you find that there's like a certain pattern of like graduation? Like a lot of these business owners, they should be You don't want to be getting to the point where all of a sudden there's like a pain point in your business, and it's like you can't grow because you don't have the right software, right? That's the last thing you want. You want to be prepared and grow with the momentum. So do you find, Eric, that there are certain graduation periods as they're scaling to that $9 billion valuated company and so forth? What are those? I'd love for you to just maybe walk us through those kind of hurdles or some things that our audience should be aware of as they're scaling during this mid 8-figure range.
I think there's not a number. Like, I don't think one could say, when I hit 25 million, when I hit 100 million, I got to change, right? Every business is different, although they have similar characteristics and drivers. So, there's, for example, a friend of mine had a classmate from school. He and a partner had taken over and then grown a compliance business around anti-money laundering, or AML, and KYC, know your customer. So they had a very high concentration of customers where I think at least 80% of their business was one big foreign bank. And this goes back at least 5 years, so it's not tied to today's banking issues. But so Bernie, while that bank was growing and needed their services, that was great, but at some time they plateaued, and then the bank had some, expense management, or they just said, let's put some of this on hold. So a significant percentage of their business dried up relatively quickly. So part of the litmus test is you have to continually keep your eyes open, and you need boots on the ground, right? Tom Peters, who was a senior consultant at McKinsey Consulting, probably in the 80s and maybe into the early 90s, he wrote that book, In Search of Excellence, and he had an expression, MBWA. Management by walking around, MBWA. So in other words, sitting in your office, even though today we have all sorts of data and inputs in from the internet and great podcasts like yours, you still have to walk in the plant. If you're in the manufacturing business, you have to go meet customers, right? You have to look them in the eye. I think Teams and Zoom is very helpful and valuable to keeping in touch with people a little bit more closely than just a conference call on the phone, but you have to see what's going on. So when things start to change velocity up or down, plateau maybe, flatten out a little bit, or you get an undue concentration, some risks that weren't there before, like liquidity. You would not have necessarily thought some of these banks would have such difficulties today like you're seeing right now. And how does that impact your business? For a while in 2005, I worked for a company that was acquired by Fortress Investment Group, which is the big hedge fund organization. And the group we reported into, we had a transaction review meeting every morning at 8 or 8:30. And the question really was, what happens if everything goes wrong? That's what this senior executive would say. And he'd say, here's all our assumptions. If every assumption we made goes to the downside, then where are we? Right. So if you take that approach with your business, and I don't mean it as a doomsday, sad sack or anything like that, but if you have eyes on the ground, eyes ahead, eyes 360 degrees, so you are looking to see where you are, what goes on, what may happen, what if, these conditional scenarios, and then what's the impact. I think you can really be in a much better position to make management decisions ahead of time and seize opportunities and box the risk and hopefully minimize that.
Well, I love that concept of building contingencies, right? Because definitely in this turmoil time, and this is not just an isolated event. We've had some, previously, and then we'll have some in the future, right? This is just consistent, right? It's the pattern of the market. So I love the concept of contingency plans and say what if, and playing that out and playing that scenario. Now, I'm curious, Eric, I would love for you to talk a little bit about maybe certain case studies or certain stories that you've seen that where, hey, you know what if we lose this, 20% of our customers because of market, trajectory, market trends, things you can't control, which is kind of what we saw in COVID, right? Definitely specifically in the the retail space and all those different other spaces as well. So my point is what if this happens, which it can right now, we've seen this. And so it's like, okay, well, how are we going to play this? If we decrease, how are we going to still run our company? So I love that, but I would love for you to talk a little bit about certain case studies you've worked with where you have seen that and how they pivoted and how they play that out, and what are those feedback loops, what are that data, and how do they build the right boundaries and systems to ensure that they're prepared for those contingencies?
So let's take a playbook for a second out of personal finance, right? In one's own family finances, the financial advisors and authors would always say, or most of them would say, have an emergency fund. So what access or sources of cash or liquidity do you have if cash tightens, right? So through PKF O'Connor Davies, I'm the outsourced CFO of a real estate, helping a startup real estate private equity fund get going. And they're in the self-storage business. So they buy land, they construct the self-storage sites, then they operate them, and then they may sell them. So, now you have a case where the Fed has raised, since I think March 2022, they raised the Fed funds interest rates by, I think, 4.5%. So they took it from 25 basis points to something like 4.75. So that is a dramatic increase. So they are now raising equity. The fund is, and they don't want to finance 100% of a real, the acquisition and construction of the sites with debt or equity, right? So they would want a mix, ideally, of debt and equity. So whereas they had made financial projections before, thinking that interest rates were 4 to 5%, now they're probably 8%. So you have a index like SOFR, which used to be LIBOR, or a fixed rate, or maybe prime that banks have, plus a credit margin. So the two pieces, prime is higher than it was a year ago, and possibly the credit margin is higher. So what does that do to the real estate? Does the revenue, and it's the same for any business actually, is the revenue, the rental per square foot that they could charge for the self-storage units, can they raise that to cover as much of the higher cost of operating? Now, if you look at your business or if you look at your house, I'm in the New York City area, so my utility provider is Con Edison Electric. They have raised the delivery charge, the transmission charge, roughly 20% in the last 4 or 5 months, 3, 4, 5 months. So, there all these costs. If you look in the supermarket, food is up. That may or may not impact the business, but all of these things trickle in, right? And labor costs going up. So are the projections that you made 3, 6, 9, 12 months ago, are they going to hold, right? And then what happens? What do the covenants look like in your financing agreements? Revolving credit facilities. Are you going to be able to draw funds on those? How is that going to look? And what happens if you can't? Or what likelihood is it that you may not be able to? So that is, I think, a real live case study that our team is advising this client on, and it has minute to minute, if you will. Maybe that's a little exaggerated, but minute to minute impacts and consequences.
Well, this is a really good example of, like you mentioned, where that feedback loop is very tight, where then you can gather that data very quickly and navigate the waters according to whatever that data is telling you in a real time. But you also, like you mentioned, there are contingencies. So I'm curious, in that scenario, let's say, for example, is there like room of margin where it's like, okay, hey, if this goes down, what is our plan of action to obviously mitigate that loss on the balance sheet, et cetera? Like, are we going to raise prices? Are we going to go ahead and decrease that, et cetera? I'd love for you to explain that. Or is it more of, like you mentioned, it's very contextual and just saying, okay, well, where the market is, if we have a vacancy rate of X amount, we can anticipate that. We can obviously withstand that loss for a little while just because right now, we just have to anticipate that. So I'd love for you to unpack that a little bit.
So if you always go back to cash, right? Cash rules the day. So there's cash and access to cash. So on the expense side, do you have operating expenses or extraneous, nice to have expenditures, and can you reduce those? So I know this is probably a silly example, but my children now are in their 20s, mid and late 20s, and for a long time, years ago, right, I had subscribed to Disney, the Disney Channel as part of our cable package, right? So again, it was only $7, right? Not even barely a Starbucks cup of coffee or two today. But they stopped watching it, and I didn't pay attention. So, Cablevision kept charging my account for about 2 years. And finally, I'm like, wow, no one's watching That's So Raven anymore, right? So taking a look, so, we saved, what, $84 a year? Okay, it's $84 a year that we were just wasting. But if you look at your business, what are we doing? Back to this fund, we were working with a particular law firm who's excellent on putting together the private placement memorandum and other documents for private funds. But the lawyer on our engagement was really, really smart and knowledgeable and helpful. But it was he had worked for a client before, and then he switched to the accounting side. The law firm side. And so Dave was used to spending whatever hours he wanted to do the job right for his employer. And he did an excellent job because I know the company. Oh, sorry. And sorry about that. I thought I had shut that off. So he had done an excellent job for his employer, and he was there many, many years. But on the law firm side, similar to the accounting firm side or any service business, you have to charge your client for all the time. So as a consumer of some of these services, can you be more efficient, right? I always recommend to clients that they have a meeting internally first and sort out all the issues, right? Dave's bill was 50% more than we expected because he didn't manage us, and we didn't, to be candid about it, we didn't manage him. I didn't think we needed to, but that was wrong, right? So the general partner of the fund, he negotiated with the law firm and got a discount, right? But it was not efficient, right? So there's ways you could do that on the expenses and actions, right? When you go to your tax accountant, whether it's for corporate tax or individual tax, do you show up with a bag, a shopping bag full of receipts? The accountant's going to be like, well, for me to do this right, I have to sort out a stack of papers 2 feet high. If you organize it and schedule it and put it in an Excel with the backup behind it, then it's very likely you could get a discount on your fees. Now, it's sort of like a water balloon, Christian, because, if the accountant or the outside service provider is not doing it, then someone internally or you have to do it, right? But in a lot of ways, keeping your eye on the pulse and paying attention to the details will help you be much more knowledgeable, and you'll have more insight and ability to do that. So that's one on the expense side. The other thing is where's the employment going? Right? There's shortages of talented employees. I'm not sure where they are. And then the cost to get them in many industries is higher. The cost of healthcare is higher. So how can you do that? Can you meet with a healthcare benefits consultant and design a different plan? Manage the expenses. Should you self-insure some of that? I am not qualified to evaluate that, actually, but all these things, every line item, it's really worth looking at. And then if you can make some changes, you should be able to hopefully reduce those expenses, which creates cash flow, which gives you a cushion. On the revenue side, do you have a customer concentration? Are you collecting money on a timely basis from your customers? If you run a accounts receivable aging, which is the number of days on average it takes your clients or customers to pay your company or your organization, then can you accelerate that? Can you have milestone payments? Can you have a down payment or a retainer, right? Generally businesses run on 1/3, 1/3, 1/3. So you have one third for labor. Obviously, it could vary here or there. 1/3 for overhead, and hopefully 1/3 for profit. So how are you running? Are you ahead of plan? Are you behind plan? Okay, and then if your customers slow down, like if you have the records, and this is where your KPIs or your accounting records should be able to help you, and we organize them for a lot of people, then if you organize that, hopefully you can notice differences while they're small. And you set a threshold, like a materiality warning level, if you will. So if, Christian, I know you're a good payer, and, if you've been paying your bill to XYZ service provider, within 45 days of invoice for 5 years, all of a sudden it goes to 60, then 90. What's up, right? Got to look into that. As my friend who runs a hedge fund says, small losses in a stock become big losses. They don't usually start big unless there's like an overnight, cataclysmic event or something. So hopefully that gives a little bit of insight into that.
It does, and that's why it's so important to have this conversation, because like you just mentioned in that example, which I really appreciate unpacking, is, you anticipating this consistent income coming in. Let's just keep math simple. You have $1 million coming in every single month. And then all of a sudden you have a burn of, $300,000 in salaries and expenses or whatever, right? Whatever it is. Well, what happens is, like, let's say, for example, you have an unexpected bill, or all of a sudden on the, client-facing, clients somehow decide they don't need your service anymore, so your monthly income drastically decreases to maybe $500,000, right? $500,000, let's say worst case scenario, but your burn is still $300,000. Well, all of a sudden, all that margin, all that that room, well, now all of a sudden you have to get into that emergency fund, and you start really seeking all that stuff, and that's why I love the word in regards to efficiencies. Always looking back in your financials, looking at, are there ways to optimize it, and are there ways to be efficient? And we talked a little bit offline. I want to bring this up. You mentioned there are like 20 areas of focus for CFOs. Like, can you guys really take a look at holistically when you partner and align with PE funds, VC funds, REITs, family offices, as well as larger companies in regards to the CFO service? We don't have to talk about all 20 areas that focusing on, but I'd love to maybe just hit on a few, Eric, at what you guys do in regards to helping the alignment in regards to efficiency.
Well, we have a lot of data given the scope of our practice. We have 1,500 employees and I don't know how many, but thousands and thousands of clients, thankfully. And I would say that not any one area or not any one client would break the bank, And we have a tremendous record of keeping clients, I'm proud to report. But, so you have to look at the data with the market data. again, your data, your organization's data and numbers against what you should be doing. I want to take a slight detour for a second, and I really cannot stress enough how important open communication is. I have worked in some corporations over time in the past. This is not the case with PKF O'Connor Davies, but where people were afraid to express themselves for fear of, negativity, right, or penalties. So the only way to get real, feedback, and I have to say my dad says this, and he's 91 today, God bless him, but it's only your real friends who will tell you the truth. Now, you may or may not want to listen, because I know he just gave me some advice this morning by text, I have to say. And I'm 61 years old, by the way. So, but you demand, I would say, create an environment where you demand and accept and welcome open feedback. Because a lot of times here we brainstorm, and I sit in the financial services group and the family office group. So we brainstorm with each other, and any question is okay. And it's like, well, what are you seeing? What are you seeing? And it's impossible today to know everything that's going on. There's just too much information. There's too much data to absorb, and there's no way any one person could be an expert in everything. Hopefully we could be expert at filtering and deciphering, but you cannot know everything. So I think it's really important to get your feelers out, like we were talking about, and we talked about Tom Peters, where we said management by walking around. So how do you get your data inputs, and are they clean? So you have to make sure that they're clean. And, in some ways, that's why an audit or a best practices review and benchmarking your own operations against, the market, against your peers, is so important. So I diverted a bit, but come back to the question, Christian.
Well, no, this is really good, and let's kind of just keep going down this path a little bit, and then we can pull back around. You mentioned, quality assurance, QA, internal audits, and this is what I find so interesting, Eric, and I want to kind of develop the misconception here that some people think because you're running an 8-figure or 9-figure business that, all your financials, all your KPIs. But I've talked to some CEOs and founders that are running top line incredible businesses, but they have no idea truly how to really, audit it, what's really going on. They've got some context of it, but I want to talk because we mentioned this offline, and I want to bring this up because I thought you mentioned a few things where a lot of your clients, they don't have consistent audits. And if they do, it's not really like thorough. You need to actually have something, because that's where you're really able to find efficiencies. That's where you're able to optimize processes and systems and leaky buckets in your business. So Eric, I would love to first of all talk the importance of having an audit, but also really what that really looks like you mentioned, a good best friend that's able to come alongside you, tell you what you need to hear, not what you want to hear sometimes, but what you need to hear. And for a winner, those are basically the same thing.
Well, one thing you could do, Christian, is people can put together an advisory board. Some companies will have a formal board of directors. Many other privately owned emerging companies, growth companies, will have an advisory board. So there's usually some sort of remuneration, compensation involved in that, but it's really a sounding board of professionals who give you insight and offer their experience so that you make you're more informed as well as make hopefully better decisions. I think that it's really important to understand continuous improvement, and there's all sorts of ways to do that. So there's 3 general levels of financial statements. One is compiled, which means usually an accounting firm puts them together. Then there's reviewed financial statements, which the accounting firm does some testing, but not as extensive testing as an audit. The other thing that's useful, and we actually developed this about 9 or 10 years ago, is for the family office client base, a best practices review. So that could include looking at cash management, employees, vendor onboarding, bill payment, tax policy, in that case, investment policy. Cybersecurity is really important today. I mean, the number of phishing emails, fake scams that are coming is, every day. I mean, multiple times a day. It's awful. And, having training, right? So you can have someone come in who's either a consultant or, our firm does a lot of this, look at the books and records and figure out, untangle the spaghetti. And the question, there's that old expression in computers, garbage in, garbage out. So if you have bad data going in to your general ledger, your accounting system, then it's pretty likely, or most likely, you're going to have bad data, bad reporting coming out. I go back to this self-storage private equity fund, Christian, and, they're working on multiple projects at a time. So we reviewed the accounting policy, and we wanted to make sure that the costs and expenses related to project number one were in the general ledger for project number one. And the same with 2, 3, 4, and 5, right? So you have to make sure your accounting is accurate. A limited number of people have, and these are what you'd call internal controls, a limited number of people have access to those systems. A limited number of people can make journal entries or adjustments. And usually most of the software, and I understand even QuickBooks, has a journal entry report. So you could run a report and see, I don't know if it identifies it by user, but what changes were made to the company or division's books and records. And what did that mean? This was not a client of our firm, but we heard a few years ago there was a company hired a new CFO. And the CFO instituted a new policy regarding travel and entertainment expense reimbursements. So historically, the company was reimbursing employees once a month. And the CFO came in and said, well, no problem. If it's more convenient for you, you could put an expense report in on the 15th and the last day of the month. Lo and behold, it turned out that Tom, I don't know what his name was, but Tom CFO was taking and submitting bogus expense reports for himself on the 15th. I don't know how many, but ultimately he got, shown the door, right? So checks and balances. Who can put a new vendor on the system? Who can approve payments? Are they different people? So does one person enter it? Does another person sign off on the purchase order? Does another person check the invoice? And then does a third person set up the wire transfer and then someone else authorizes? Now, a smaller company and often a privately owned business, you have less segregation of duties just by the way it goes. But it's still worth looking at, and as you said, plugging the leaks or avoiding the leaks. I think you have to look line by line. And then QA, you said, quality assurance, exactly right, whether that's an internal person or your executive team or outside people who come in. And then you want to really dive down on a line-by-line basis and see what's going on. Last year sometime, my accounting department here at the accounting firm called me, and they wanted to know if I wanted to approve an invoice for it came from the UK, so £2,300 sterling magazine subscription. Okay, I didn't submit that. I didn't subscribe. I didn't even know who they were. So thankfully, my accounting department came to me and said, Eric, did you want this magazine? I go, it's bogus. No way, right? So, we would have wasted if they didn't call me, and, that's our checks and balances, thankfully. If they hadn't called me, maybe they would have wasted $4,000, right? And, every dollar counts. The other thing that's emerging is taxes. We do, as you mentioned, Christian, we do a lot of transaction advisory relating to private equity and mergers and acquisitions. So something you call quality of earnings. So we check, and that's a due diligence form. We check the books and records of a company to be sold or to be acquired, right? Buy and sell side due diligence. So, what's the working capital? Is that showing? And I think one area that people overlook is actually taxes. So we've been doing more and more tax due diligence. The world is changing. A lot of the states seem to be looking for revenue, tax receipts. So if you change your business and the requirements for paying taxes in a certain state vary by state, and now you have Amazon is such a big player in the market with the e-commerce. So a company based in Florida, where you are, or New York, where I am, or another state, they may actually say that XYZ company is deemed to be doing business. It's called Nexus, Nexus, having connection with that state, and therefore have to file income taxes, an income tax return in that state. So you could reorganize legally, or the way that your business expands and morphs, you could end up owing tax in a place. So if you're not on top of that, you could end up with penalties and interest. And if you're trying to do a M&A transaction, a buy or a sell, or even a financing, sometimes, a notice from a taxing authority, or an unanswered letters from the IRS or one of the state governments or a municipality could slow down the deal or kill it. So it's really important to look at every component of the business. And if you have the in-house expertise, great. If you feel you mentioned growth companies. So if you feel that, the company, and this goes back to the gut feel test, if you feel like your business has outgrown your professional services providers, it's time to get a second opinion. Have someone else review the tax return. Have someone look at the books and records. Revisit your KPIs, your key performance indicators. Were the ones that worked last year, 2 years ago, 5 years ago, do they still apply today? Are they still the best in class for where your business is today and where you want to drive your business?
You're bringing up so many good points, Eric, and I'm so glad we're just kind of foot-stopping on this, because in today's turmoil situation, you got to count every dollar. Where is it going, allocating it, and so forth. And I have friends that were running, $20, $30 million top line businesses, and they were like $5 million. Once they did an audit, they started realizing $5 million was just like disappearing. Like where was it going? It was going to campaigns. It was going to random things. It was going to whatever expenses. And then, it just, you don't really know where it's going until obviously someone like, PKF, O'Connor, Davies are able to come in, align yourself, have that audit, have that conversation, and really, like you mentioned, go line by line. And then also, I really appreciate you explaining a little bit about the different exits, in regards to M&A, because see, I had a friend of mine that was actually their head HQ was in California. And before he exited, he wanted to transfer it to another state because of the tax consequences in a positive direction. But he had to do that 2 years prior before the exit. But there's a lot of that tax strategy that's very, very interesting. So let me ask you this, Eric, in regards to specifically taxes. Do you find, and when I'm talking about exiting, I had a terrible situation, and I just want to be very transparent, where I did not, when I had my first exit, I did not actually talk to a tax strategist. I did not do it. I just was like, yay, this is, that was more money than I ever had and all that fun stuff. So I messed up. That's one of the reasons why I'm passionate about podcasting and talking to people like yourself and bringing awareness to this subject, right? So I messed up. However, though, that gave me an opportunity to learn and obviously, now figuring this out. My question, Eric, is when people are looking to exit, when does this conversation need to be had? 2 years, 3 years? Because what I've noticed, and I've even talked to wealth managers, a lot of people, they have an exit, they sign the dotted line, all of a sudden they have all this money, and then they go talk to a tax strategist, or they talk to a wealth manager and say, okay, what should I do with my tax bill? And it's almost like, well, we should have been pre-exit than post-exit. And there's a lot that goes into it. But I want to ask you, what are you noticing in regards to the people that you're working with, and when they should, in their timeline of exit, process or exit thinking, in regards to taxes?
I I really believe the best outcome for a business owner or an individual or family office is ongoing planning. And I don't say that just because I represent an accounting firm, but first of all, everybody is so busy today, busier than I've ever seen before. And there's so much more knowledge and rules and complexity in the world. I think it's very difficult or impossible to keep your arms around everything, right? So, and the entrepreneurs we work with, they're such an exciting breed, if you will. They are making things happen. They are implementers and creators of change, right? And I think Tom Peters, he said, a maniac on a mission, right? So I think it's really important to bring in experts and specialists who focus on that. So there's this, it's a long-standing trend, but we see it accelerating with outsourcing. So the entrepreneur has a vision and they're implementing it. And then at some point, the business hopefully, grows to the point where they need to bring in some colleagues. So if they're focusing on doing biotech or software or whatever else it is, are they an accountant? Are they a tax expert, right? So getting that independent view is really important. We've seen family offices and executives, and entrepreneurs, they make a remark. Something is going on, and then they don't tell their advisors. But when they meet with the advisors, they make an offhanded comment or a side comment. And what happens is when they do that, the accountant or the lawyer or whoever else, oh, you know what? We should be doing this. And hopefully there's enough time to do that. So generally, and you mentioned 2 years, I don't know if there's a specific rule of thumb regarding time, but it is worthwhile to have, more time to create a solution, right? If you want to do some tax planning, it's typically much better to do it earlier so you can have time to put the plan in place in an orderly fashion, design an appropriate and effective plan, and then let it gestate, let it bake a bit. In some ways it goes back to communications. Professional services is a combination of a number of factors, right? One of which you talked about, Christian, which is expertise and direct knowledge. But the other one is people to people, right? You could intersperse cell phones with texting or WhatsApp or, email or whatever else you want to do. But at the end of the day, it's 2 to 3 people communicating with each other and taking into account all of the issues. The other thing is execution. In our Providence office, we had a client who was about to get divorced, and he was redoing his will, and he had an insurance policy on his desk. You know where this is going. Not good, right? And tragically, he was about to sign, and he had a heart attack and died. Now, I don't mean to be melancholy or anything, but it really does tell you, it's a signal that you have to implement your plan, okay? And to be candid with you, it took me a while. 10 years ago, I just gotten divorced, and to sign a new will, and it was emotional and whatnot. But, my lawyer said, sign a document. Do you have any more changes? No. Well, then sign the document. Here's the pen, right? I know I'm a little dramatic. But, it does take time to contemplate all the issues. We also, from time to time, see people, I think, try to save money, which I have recommended on this podcast. But the idea is to take the optimal combination of fees, service, someone you can work with, expertise, experience, and knowledge, right? Because at the end of the day, it's a cost-benefit analysis. And, to get the most value for yourself, your shareholders, your employees, your children, your grandchildren, whoever that is, you want to do it right, right? You want that documentation to be in accordance with the tax laws and legal side today and where you're going. And as you said, it does take time to put that together in a thoughtful and complete way.
Yeah, and you're right, because it's like it's all the, your offense is only as good as your defense, right? And I've seen numerous times where people have built a beautiful company, amazing, and like you mentioned, something unexpected happens. They get in a car accident, and the owner it's so sad to hear some of the stories you've, and you could probably name off of numerous of your clients that are in that same situation or something happened, and it's sad. And so again, that's why I love having people like yourself on that kind of talk about the boring stuff, if you will, right? But it's so necessary. It is extraordinarily important. Because again, it is the foundation of building any successful business that lasts for generations to come and so forth. Eric, I want to talk a little bit about. I want to pivot a little bit personally. You are very incredible networker, a super connector. I've listened to some of your other podcasts, and you're talking about success tips and other things like that. And one of the things I found very interesting about the way you operate is you're always thinking about how to build relationships and how to bring people in alignment. And why I think that's really important in today's world is it's not a zero-sum game. It is more of that growing the whole pie together, and everybody gets a bigger piece of the pie. And Eric, I want to ask you, when did you realize that was one of your superpowers? When you started realizing and you started doubling down, and that became like your thesis in regards to how you operate and structure, even though you are focused with PKF O'Connor Davies as a senior managing director, but the way you operate is very, very focused on collaborative networking and making those alignments correctly. So when did that occur, and when was that evolution?
Probably it ramped up in the last 10 years, to be candid about it. I think I was always a people person, but I was in a number of networking groups, and I also began to realize when I followed some really what I thought were strong leaders and business executives, that they had teams of other experts. So I realized over time, as I was saying, that no one can know everything. You can know maybe a little bit about everything, and hopefully you can know how to decipher the noise, right? Cut out the noise and the fluff, right? So if you create that process, and then the other thing is here we're an incredibly team-oriented culture. And people would call each other. We have over 225 partners now, and an international business. And there's all sorts of things we see, right? So people started calling me, and they said, do you know how to do this? Because I have some banking experience, accounting, some real estate experience, some payments industry experience, hopefully some life experience, who knows, right? But so what happens is, if you wanted the best deli in New York, where would you want to go? So if you're coming to New York, you might say, geez, this one over here, the Carnegie Deli. I don't know if that's still around. But so becoming a resource, and I think that's really important. So if we can do something for a client, we will do it. If we can't, we will actually find another resource. And that's something I'm incredibly proud of. And I've been at PKF O'Connor Davies since March of 2006. So it's almost 17 years. And it's the integrity level and the care for the clients is huge. We want to do the right thing. So you must do the right thing and give candid and thoughtful advice and know when to cry uncle. So if you can't do it, don't take it on. So I started... I work with one particular PE, private equity lawyer who also does mergers and acquisitions, and I saw that Paul was always helping people. And I said, isn't that interesting? Now, a lot of the industry calls that a COI or center of influence. I don't like that term, but I guess that's right. I like to think of myself as an additional resource. So the more people you talk to and can help, I really believe it comes back, right? And if you treat people in the right way, then you can, people say, you know what, we got a fair shake from Eric at PKF O'Connor Davies. And they really tried to give us thoughtful advice and solid input. And it's interesting, one of my colleagues and I, we've not won engagements over time. And sometimes, a couple of years later, the people say, we're in a position now, we realize what you said and we'd like to work with you, right? Can we revisit the discussion, right? So I think you have to be thoughtful. In geometry class in high school or algebra, they say the shortest distance between 2 points is a straight line. Right, so it's pretty hard to get a straight line, or at least all the time. But if you think about where you are today and where you want to go, and that reminds me of one other thing. If your goal is to sell your business, so we do a lot of work on exit readiness, what does your business need to look like, numbers-wise, customer-wise, profitability-wise, people-wise, leadership-wise, to attract the buyers that you want to sell to? And where are you today? What's the gap analysis, and how do you get there, right? And we do a lot of that work, and our people love that work. It's very interesting work on the strategy side, on the financial side. And so it comes down to helping people, doing the right thing, and being accessible. So you start your network, and I firmly believe that a person's network is, other than family and health, family, friends, and health, is your most valuable asset. So how do you guard that? How do you bring in quality people who you trust, people who can help you, or honest, will give you feedback, and how can you help each other? So I've that's how I approach the networking, and thankfully it's I have some nice contacts.
Yeah, and that's why I think it was so interesting how you approach it, because I have, it's not that sales mentality. It is a very, very relational aspect, and that's why I just wanted to highlight that for our audience, because it is extraordinarily rare in today's world, where everybody wants to be in bed right now, and instead of sitting there and saying, hey, let's have that conversation, that dialogue over a period, and building that relationship. And like you mentioned, maybe 2 years down the road, they all of a sudden come back around, loop back around, knock on your door and say, hey, we're ready. And it's just the serendipities of how sometimes life works. Eric, I really appreciate you being on here and unpacking what you guys do, and really highlighting the CFO services, and really explaining and emphasizing the importance of auditing, and really, ways to optimize and find efficiencies in those leaky buckets. And we all have those leaky buckets in our businesses. And some of the greats have had the same situation. We have a lot of content out there, but that's why I love having people on out that are able to unpack that and talk, but also explain like certain red flags and green flags in their accounting and their money allocation. Eric, for those that want to reach out to you, that maybe have more questions, naturally going to have more questions, that want to be part of what you got going on. I know you. How do they reach out to you, my man?
Thank you so much. So my name, Eric, E-R-I-C, G as in girl, E-L-B as in boy, Eric Gelb. So you can find me on LinkedIn, or our website at O'Connor Davies is www.pkfod.com.
Social media.
That's pkfod.com, and we're in the New York City area most of the time. Sometimes Boston I go up to, so would love to connect
guys. Those
with
links
your
are in the
audience,
description
below,
so I'll make sure to put a LinkedIn down there. I'll put his other influences down there, his other and that's going to happen now, today, tomorrow, 6 podcast episodes that he actually published in other Zoom, and reach out to him. I would highly recommend it. If you guys have any questions, or you guys are sitting there and thinking, okay, there's a lot of turmoil right now in the world and in the economy, 6 years from now, 12 years from now, whatever it is, it's going to always be in those ups and downs. But the reality is being able to, like Eric Gelb, that are able to help you navigate these uncertainties. Eric, I really appreciate you being on here, again. I really appreciate that. Guys, that is the Senior Managing Director at PKF O'Connor Davies, my friend, Eric Gelb. Guys, that is Journey with Christian D. Evans podcast. Until next time, be uncommon if you can. And bada bing, bada boom, my man. That was a lot of fun. A lot of fun. How'd you feel, man?
Well, thanks. Yeah. I hope that was informative.